first and foremost, welcome to our R&D tax relief webinar, everyone. Thank you very much for taking the time to join us today. Our first one of these that we actually held was probably a couple of years ago now, about a year and a half ago in June 2020. I think that was quite successful, to be honest. We just want to get the word out there as much as possible about R&D tax relief. It's been around for quite a while now. So I'm sure plenty of people have heard of it, but they might not know sort of the ins and outs and how to make a claim. So we got good feedback on that, and I guess we just wanted to host another one, try and get as many people as possible understanding what R&D tax relief is, what goes into making a claim, and sort of the changes that there's been over the past couple of years from HMRC, from the legislation and the government and the changes they've introduced. I can see there's some familiar names in attendance and some not so familiar, which is good on both accounts. It's nice to have people that want to hear about it. So I'm hoping to cover off the main topics really. So the basics of R&D, what types of activities qualify, what costs qualify. In addition to that, the recent changes, and then our Cowgills process for claiming R&D tax relief and how we usually assess businesses during that process. I myself am hosting the webinar, Dominic. I've been at Cowgills for 8 years now. My overall role has been preparing R&D tax relief claims. That's sort of what I was brought in for, and it's my bread and butter. So I've been doing it for quite some time. Claudia Harrison, who's going to host part of the webinar as well, she's been with us 3.5 years now, and in a similar situation to me, the vast majority of work that Claudia undertakes is on R&D and helping clients make the claims. So Claudia is going to take over the first few slides, and then from there I'm going to follow on with a bit more detailed information about the changes and HMRC's guidance. If anybody has any questions, if we can try and leave those till the end, and we'll get those covered off on the last few slides. I think there is a chat box as I understand it, but if you'd also like to have a sort of unmute yourself and raise a question in person, that'd be great as well. So if we go ahead, if you'd like to take over, Claudia.
Thanks for the introduction, Dom. Good morning, everyone. So first of all, with the basics, what is R&D tax relief? I'll just minimise my screen so I can actually see the slides. It's a government-funded relief, and it's aimed to incentivise companies that are undertaking research and development in the UK. It's been around since around 2000, but like Dom said earlier, companies are only just hearing about it now, and it's becoming a lot more well known. So the relief works as a further deduction against your company's taxable profits or losses, and for loss-making companies there is an option to surrender those losses, and in return you would get a cash repayment from HMRC. I'm sure you all know it is a very generous relief. You get 25p thereabouts for every £1 of qualifying spend, and there's differing rates that apply for loss-making companies, about 14.5p to 33p under the SME scheme. So is your company small or large? There are 2 different rates of relief that are available for companies that are undertaking R&D under the tax relief regime. There's the first one, which is the SME scheme for small and medium-sized enterprises, and then there is also the large company relief or R&D expenditure credit, RDEC, which is the second one. There are also some instances where small companies can claim RDEC, but we'll cover that off in the later slides. To find out if your company is an SME for R&D tax relief purposes, we look at 2 different things. So firstly, the number of employees that your company has. If you have less than 500 staff, then it would be considered as an SME. If you also have a turnover of under 100 million euros and gross assets of less than 86 million. So the above tests are examined on a group-wide basis.
There is just a bit of a funny thing there. It is actually euros and not pounds that the limits are referring to, because R&D tax relief, it was sort of an EU introduction originally, I believe, and hence why the limits are captured within euros. So we just obviously have to do the conversion rates there when we're assessing UK companies.
Thanks, Tom. So our clients do tend to remain within the SME limits, with less than 5% that do make claims under the large company scheme. And as such, the following slides and mainly this R&D webinar do cover the SME scheme. RDEC is slightly less beneficial in that the relief is only available at 13p for every £1 of qualifying spend, which is roughly half of that of what you would get if you were claiming under the SME scheme. But if you do have any questions in relation to the RDEC scheme, please just let us know and we're happy to answer any questions after the webinar. What is the process and what are the time limits? So first of all, what we would usually look at is what activities is your company undertaking. We'd identify any qualifying projects and what specialist activities you're carrying out. The main thing really to take from that is, have you come across any scientific or technological uncertainty? Once we've identified that and pulled together all the potentially qualifying projects that you're undertaking, we would then look at the costs that are relating to that. So we'd go through, assess who's worked on the projects, whether any third parties have assisted, whether any licenses have been used, and then we would build the cost up from there and start to collate a claim together. Once we've done that, we would then look to prepare a full R&D report, which would summarise both the projects that you've undertaken and the costs that you've incurred, and it would evidence all of that to HMRC. In terms of pulling this together, we are really flexible. The company can prepare the information and we can then go through it, review it, ask any more questions that we believe might strengthen the claim as much as possible. But we do like to have meetings, workshops, things like that to try and understand really what your company is undertaking, what activities have been going on over the past couple of years, and flexibility really is key when we're trying to pull this together.
Yeah, and I guess just following on from that, Claudia, there's been a number of instances in the past where we've sort of gone on site to clients' premises, obviously had a meeting, discussed R&D, what the qualifying boundaries are of a project, and then from those discussions, it's actually sort of little light bulb in people's heads as to say, oh, actually, well, we've been doing this area of work as well, and we didn't quite think that would qualify originally, but now having had a discussion, we do believe it might do. What do you think about this activity? And as a result of that, the R&D claim's gone from being 1 or 2 projects to maybe 4, 5, 6. So we're going to cover sort of what type of activity qualifies in the later slides.
Yeah, just on that as well, Don, there's quite a lot of companies that don't realise that they can claim for failed projects. That's one thing. They just think they can claim for projects that have been successful. So it is useful to have that conversation and have those meetings for us to understand what you've been doing.
Exactly.
In terms of time limits, you have 2 years to claim for the end of your company year end. We're currently in time to claim for the year ended 31st of January 2020. After the end of this month, that won't be possible, and it'll then be the 28th of February 2020, and so on.
And I must stress there that for any Jan 2020 year ends, we are hitting very close to the deadline, and we would be struggling to pull a claim together in that length of time. But just for your knowledge, we do work to 2 years. That's how far we can go back. So thanks very much for that, Claudia. If I go ahead with the remaining slides then. So the types of projects which HMRC as qualifying in their eyes are defined as brand new projects or appreciable improvements to existing products, processes and systems. So first and foremost, something brand new and unique, novel within the industry that competitors would sort of look at and say, right, how has that company been able to do that? How have they produced this new product, process or system? And they would look at it and say, right, in order for us to develop something of that caliber or nature, we would have to undertake an R&D project ourselves. We would have to do testing, analysis. We might not get to the same solution as that company that is making the claim, and hence it's brand new and unique to the industry. One area that what we're seeing qualifying more commonly, I guess, are what HMRC call appreciable improvements. So that's where you have an existing product, process or system within the industry that people do already know about, but you're looking at it and saying, right, what are we now doing to this product, process, or system to enhance it, advance it in some way, maybe save on certain costs, utilize new materials. You're taking an established solution and enhancing it into something which exceeds or advances on current industry knowledge. It can't just be a new product that you're developing. It has to be an advancement in an area of science or technology during the development process. One example I like to give, and I'm going back a few years now, and I don't mean to make fun of it, but it's a good example to give, is in relation to sort of the Apple Watch when that first came about. I would have said Apple would have 100% made an R&D claim, probably in the States, for that piece of technology, getting something so small and integrating that software into a small watch. Whereas I once had a call from a prospective client who said, I've developed a new watch, and I was thinking along the lines of an Apple Watch. I said, right, okay, what have you done to it? And they'd said, well, we've changed the face of it, changed the face of the watch. We've taken off the numbers, and it's a new design. I was saying, right, we're not going to be able to put in an R&D claim for that, because there's no quite advance in science or technology. You've simply changed the design on the face of it. So that's a bit of a unique and funny one. But that's where we need to show there has been an advance in the industry, as opposed to just simply changing the aesthetics of something. So that covers qualifying projects. In terms of qualifying costs, so once we've got those projects that we can look to make a claim for, we need to then look at who was involved, which staff members of the company were involved. We can look at their gross salaries, employers' NIC, employers' pension contributions, and then any potential bonuses. We do have to exclude dividends. We're not allowed to claim for those, given they're paid out from the profits of the company. So we only look at those that are available as a deduction in the company's P&L account. We can also look at software licenses and consumable costs. The usual costs that we include here are light, heat and power for the premises, and we make a reasonable apportionment based on R&D staff time over total staff time. We can claim potential components used up in the R&D process. So say you've developed a product, or maybe you've developed numerous products and prototypes, but you've not been able to charge on the cost of those prototypes to anyone. They've had to be scrapped or used up in the R&D process. We can look to recover some of that cost. And then, as Claudia mentioned earlier, the software licenses, if we have a software related project, if you've needed specific licenses to carry out the R&D, we can make a reasonable apportionment of those costs as well. Another area of qualifying cost is those incurred on third parties. If you need third party testing or analysis for an R&D project to determine whether it's successful or not, or if they've assisted in any specific element of the project. Say you've needed a specialist consultant in some area, and they've obviously invoiced the company. Now, subcontractor costs are restricted at 65%, and the reason behind that is because HMRC and I guess the government in general say subcontractors will have charged a markup on their overall cost. So the restriction to 65% is trying to get back to the cost of that company of carrying out that work. Now, I have a couple of notes here that say the subcontractor does not need to be UK resident, and there's no requirement for the subcontracted R&D to be performed in the UK. Now, I've put an asterisk there, and as well, in relation to the qualifying cost should be restricted to 65%, but as per the bottom down here, and what I'm going to cover a little bit later, some of those rules are changing with effect from the 1st of April 2023. So the R&D work is by a subcontractor has to be performed in the UK. So that's going to be something that we'll assess on a future basis. The qualifying costs being restricted to 65% if it's actually a connected company that is doing the subcontracted work. So you've subcontracted it to a company within the group, your own personal group, then we can potentially claim the full cost of that, but an analysis does need to be undertaken. So following on from subcontractors and subcontracted R&D, as per the previous slide, SMEs that subcontract qualifying activities can claim relief on 65% of the payment made to the subcontractor. Now, there is a bit of a grey area here, and we need to be careful where we're subcontracting R&D work, or R&D work has been subcontracted to us. So say we're an SME, a small company, and we're undertaking an R&D project on behalf of, say, a large company. We may make a claim, but it has to be under the large company scheme. Now, this is just an area of legislation and guidance that isn't quite clear at the moment, and there have been quite a few tax cases in relation to this issue to try and clarify the point recently. SMEs undertaking R&D for other SMEs cannot claim R&D tax relief, so we need to be very careful when we're looking at the relationships as to how a project arose. Was it subcontracted by another company, or is it our internal project that we're then subcontracting an element of to somebody else? I can't stress enough that this needs to be assessed in great detail, and we need to be very careful when looking at any contracts. As I've said there, it's a very grey area, and we're now seeing an increase in tax cases, albeit there are currently contradictions in the industry, and appropriate disclosure is therefore paramount. When we're preparing our R&D tax relief report, we'll go into quite some detail about this and make upfront statements to HMRC so they're aware of the situation as to how the projects arose and why we have taken the view that we have in claiming SME relief or RDEC relief. I'm going to sort of get into a little bit more detail now about this point, a couple of the tax cases, and I'm hoping that that will be able to demonstrate that it is a grey area and why we have to assess it in some detail. So as I've said, an SME cannot claim the usual SME R&D tax relief for expenditure which is contracted out to the company. Equally, an SME cannot claim the normal relief available for subsidized expenditure, i.e. Where you are paid for the work that you are undertaking. Relationships do need to be carefully assessed, and HMRC have been looking at it in a lot more detail. And if I'm honest, I think since COVID has been around, this has been an area, especially R&D in general, where HMRC have been assessing. They've been saying, right, is it actually meeting our requirements? They've taken 100 new officers on to assess claims, as they feel that it's an area where there's quite a lot of tax avoidance, and there's been plenty of boutique firms popping up quite recently who haven't been sort of assessing and claiming in line with the relevant legislation in as much detail as possible. An SME will generally be able to claim RDEC, the large company rate, for contracted out or subsidized expenditure, but it can be significantly less valuable. The value of an RDEC claim is about half that of those available to SMEs. I think one thing to note is it's assessed on a project by project basis as well. So we may be doing work internally, the project arisen internally, we want to improve a product, process or system. That can then be claimed under the SME scheme, and then where we may have another project for the same company that's actually being undertaken on a subcontracted basis, that we can then claim that under RDEC potentially, and we need to assess these rules. So it's not a case of a company falls within RDEC as a result of this for its whole claim. It might be a mix and match of both, and that's why we need to be careful as well. Just furthering this point then, I guess, on subcontracted R&D, HMRC's interpretation, so you can tell it's not actually the legislation, but their interpretation of what contracted out and subsidized means, is such that taxpayers are now facing challenges to claims for usual SME reliefs. So in the past, as I've noted there in the bullet points, we would have to have assessed who owns the intellectual property arising as a result of the R&D project, who has governance over the project. Are you undertaking the work off your own back? Do you have full control as to the work that you're undertaking on that project? And then who is taking on any economic and financial risk, i.e. if you are undertaking a project and you are being paid for every element of work that you carry out, then you may not have as much risk as the company sort of funding that work. Whereas if you're only being paid in stages where you are successful on the R&D, i.e. if you have an element of the project that you're undertaking that's considered a failure or doesn't meet the company who you're undertaking it for's requirements, then you are also having a risk there that, look, our costs might not be funded here, and there may be a potential loss to your company. And that is what R&D tax relief is there for. It's to reward that risk, say, look, this company is doing this on its own back. There needs to be some sort of funding available for that. And that's the whole reason it was implemented. So we do have a first tier tax tribunal case, a decision in Quinn London Limited, which was a construction company, and it's a very recent judgment. So these movements have all been within the past year or so. I must point that out. And HMRC's view in this case was that the project they undertook was funded by another company. There was a significantly less risk to Quinn in undertaking that R&D project, but HMRC's argument was not allowed by the tribunal. Quinn were actually successful in defending their claim as an SME claim, and saying the expenditure was not subsidised even though payment had been received. HMRC then made it known that their view hadn't changed as a result of this case, which I'm not quite sure how they've got away with that for the time being. And indeed, they've updated their guidance to reflect their own new views, without even mentioning the Quinn decision, which is covered further in this next slide that I'm about to go through. So this is in relation to the subsidised expenditure point. Such expenditure is defined in the legislation as expenditure which is met directly or indirectly by a person other than our company that are claiming for R&D tax relief. Our Chartered Institute submission has argued that giving the word met its normal meaning means that the company must have been specifically given to the SME to cover its R&D spend for the expenditure to have been subsidised. So that money needs to have been allocated for this specific project. This interpretation was then taken to the first tier tribunal in Quinn. Quinn's argument was that they agreed that the new technical knowledge arising from the R&D project was no advantage to the customer itself. The customer that they were doing the work for had basically said, look, this is what we would like you to construct on a grade listed building. Are you able to do this work for us? And the whole R&D journey was for Quinn to try and get to this end point. They were the ones making the decisions. They owned the IP arising as a result of the R&D project. They obviously had those staged payments where they had to get sign off by QS in order to receive any payment. So they took on substantial risk in undertaking this commercial project. And then any R&D arising and new knowledge, Quinn would use it in the future as well. So there was nothing that suggests the contracts were anything other than straightforward commercial contracts under which construction projects were undertaken for Quinn's clients. And that's why they were successful in defending their view against that of HMRC. The contracts did not address the treatment of R&D undertaken by Quinn and did not contain any clauses which sort of allocated the costs of any R&D will be covered by the clients. Clients were not interested in Quinn's expenditure and how they incurred it. They were only interested in the end result. So nevertheless, HMRC maintained that the position they took in that case was correct, and that's reflected in the guidance. So this is definitely an area that we need to be careful of going forwards, and R&D advisors and clients alike who are claiming need to be very focused on this point. Quinn, as I understand it, HMRC are not appealing the decision in Quinn, even though they lost, because they take the view that it was very fact specific. So companies should be aware that, especially where R&D is undertaken to fulfill a particular contract or the project has arisen externally, that HMRC could be likely to challenge the eligibility of expenditure for claims. However, based on that case, where we have a robust defence and we've done our due diligence in looking at the contracts and assessing the actual situation, we could defend HMRC challenges. The tribunal certainly appeared to conclude that it requires a clear link between the funding and the expenditure for it to be subsidised. I know I've gone into quite some detail about that specific case there, but if anybody has any questions about that afterwards, or if they've got any projects that sound similar to that, I'm more than happy to run through. So following on from that then, what recent and incoming changes have there been to the R&D regime? Well, with effect from the 1st of April 2023, the government and HMRC are going to allow the claiming of cloud computing and data costs. Now that includes license payments for data sets and computation, data processing and software. Usually hosting costs and sort of server costs for Amazon Web Services maybe shouldn't be included within R&D claims. And it's always been an area that we felt, well, actually, it should technically be a qualifying cost because that is needed for some of the software projects that are undertaken by companies nowadays, just because they need the major capacity of those servers and hosting services for the R&D that they're undertaking. So luckily, with effect from the 1st of April 2023, we're able to include those costs within a claim. As I mentioned previously, where we're looking at claiming for third-party costs we've incurred on an R&D project, there's going to be limits on that, as the R&D needs to have been undertaken in the UK by those third parties. We can't have subcontracted it to someone in the EU or anywhere else in the world if it's being undertaken in a different country. That's the same for externally provided workers. So any agency employees that we've got working on specific R&D, they need to be on a UK payroll. In addition to those two changes, there is also now a restriction on tax credits. So where we have a company that's in a loss position, and as Claudia mentioned previously, we can claim a repayment for losses on an R&D project. For accounting periods starting on or after the 1st of April 2021, and we have already started to see this be implemented now in claims that we're preparing. There are restrictions on the payable tax credit available of 3 times the company's total PAYE and NIC liability for that specific period in which we're looking at the claim. The vast majority of instances, this isn't an issue, but it's just one to keep noted that there is now a cap to try and limit companies where they're in a loss position receiving substantial tax repayments. It's all because HMRC believe that this is an area that has been exploited in the past, so they're trying to clamp down on it. Further sort of recent changes that have arisen already, and we're seeing the impacts of these. As soon as HMRC and the government announced COVID support, they were very quick to update their guidance to say, look, this COVID support is going to impact R&D claims, especially in instances where we have furlough payments, and we've used the coronavirus job retention scheme. So if an employee was furloughed, obviously one of the conditions of that is that they cannot have undertaken any work for the business during the furlough period. That means that any time that they have been furloughed, we can't say they were working on an R&D project, which, to be honest, is accurate, and it needs to be reflected within the claim. So we need to knock out those furlough time periods from those of employees' time spent on R&D projects. So that needs to be assessed in detail. We also have the coronavirus business interruption loan scheme, and a few of these now, I guess, are slightly different to the way the furlough claims need to be assessed, and we haven't seen many of these, I must stress that. So the CBILS loans, where those have been received, they're notified state aid. These may preclude R&D on a project basis. If a project has received one form of a notified state aid, such as CBILS, then it cannot receive another, such as R&D tax relief. So a project which may have been funded using one of these loans cannot feature in an SME claim, as it's technically falls within the rules for subsidized expenditure, but it can still be included in a large company scheme. So we just need to assess which scheme a claim should fall under in those instances. Where a bounce back loan's been received, it's similar to the CBILS loans. It's notified state aid, and then we need to look at whether we need to claim it under the large scheme or not. A few other examples of funding. So small business grants fund, again, grants generally be de minimis aid unless the total aid that the company's received has been in excess of €200,000 over a period of 3 years. Over the threshold, the grants will be notified state aid, and we need to assess whether it's claimable under the large scheme or not. So I guess the main thing to take away from this is that although your company may be a small enterprise, may meet the small company limits, you may still have to claim under the large scheme, and there are quite a few instances now where that might be the case. So how a project arose and how it was funded needs to be assessed in detail. We also have the Future Fund. again, government offering loans that convert to equity where a company raises matched funding privately, measure would not normally affect the company's R&D claim. And if any R&D grants or loans have been received from sort of bodies like Innovate UK, the state aid rules come into play there and they need to be assessed also. So sort of covering things off then, what is our R&D process and the process whereby we make the majority of our claims? So we'd usually work with your company or business to understand your activities and what type of projects you've been undertaking over the past couple of years. We'd then work with you to gather summaries of the R&D and what you've been up to in the best way possible for yourselves. You're able to provide that information. We have our relevant templates, but then again, we like to come out to the businesses, have those meetings, have the conversations about what you've been up to and ask further questions, because that's when we sometimes get further R&D projects arising as a result of those conversations. We can have meetings or obviously conference calls now. I think they've become the norm, Teams and Zoom meetings such as this. We review those summaries that we pull together in line with HMRC guidance and legislation. To analyse the potential weak areas of the project. We question certain areas, try and strengthen the claim as much as possible prior to anything being submitted to HMRC. We obviously work with yourselves to assess the qualifying costs and any contracts that are in place from a subcontractor relationship that might be arising there to make sure we're claiming under the relevant scheme and disclosing it as appropriate to HMRC. Once we've undertaken that work, we then pull together a full detailed report evidencing everything, which is then submitted for their approval via a formal amendment to the company's tax return for the relevant year for their agreement of the claim. Case studies from clients that we undertake this type of work for. So in the main, annually, we work with 70 clients or so to assess their activities, usually during the past 12 months. It's much easier just post year end to assess what you've done in the last year than it is to try and go back and claim 2 years worth of qualifying projects and expenditure, because quite often companies can't remember what they did yesterday, myself included sometimes. So we need to try and nip it in the bud in terms of understanding what you've been up to over the past 12 months. Main areas where we see claims are in the engineering sector, construction sector, and software sectors at the moment. Those are the main three that we try to focus on, but we do have experience in a wide variety of industries, pharmaceutical as well. So it may be achieving sustainable methods of production or operation in relation to engineering, reducing costs of an engineering process by new or innovative means, design and development of a new or unique piece of plant or machinery. That type of work can all potentially qualify. In the construction industry, some examples we've had are works to grade listed buildings, integrating newer technologies or materials within buildings, meeting BREEAM standards, bespoke designs, and passive house guidance as well. In the software industry, innovative methods of capturing, transmitting, and protecting data, integrating of new hardware and software where the knowledge and is not readily available within the industry, where you're having to do the testing and analysis yourself in order for that project to be successful. That can potentially qualify, and tools to extend functionality of software programs or of operating systems can potentially qualify as well. So that's just a bit of knowledge as to some of the projects we've claimed for in the past, but I must stress that it's always good to have a conversation about any new activities that you feel might fit the remit. We're always happy to say, look, no, we don't think this potentially qualifies, but have you considered X, Y, and Z? So we just like to have those conversations. Here's a few case studies from R&D clients we've worked with. These now appear on our R&D website that's just been released this month. I think it's a link from the main Cowgills website. So if you go on Cowgills and search for R&D, further information should be available there, as well as a few case studies. We're hoping to upload a few client testimonial videos as well, which might obviously help you understand a bit more about what we do and whether you can potentially make a claim in our process for claiming. So just to summarize then, the main points to take away. There must be an identifiable advance in science, scientific or technological uncertainty. So there needs to be an uncertainty arising as a result of the project where we say, we're not sure whether this is going to be successful or not. So as a result, we need to undertake a project testing and analysis to overcome the issues faced. It can't just have been overcome by simple meetings or discussions and be a short-term project. We need to start looking at those where there has been a long-term advance that's trying to be achieved. The relief is available to all companies carrying out R&D, not just those in white coats working in labs. Most companies undertaking R&D sometimes don't even realise that they're doing so. We quite often go out to companies and they tell us, look, we're just doing our job. If your job does involve that problem solving on a day-to-day basis, we may be able to say you are undertaking an R&D project there, so it's always worth the conversation. Again, the relationships between parties and how projects arise is a key area that needs to be reviewed in detail, as well as COVID reliefs and any other grants received, which also need to be assessed. I can't stress that one enough. I know I've hammered it home to quite some tune today, but it's definitely the area HMRC are looking at in great detail. And then I would just point out to be aware of anyone promising significant repayments without first understanding your business, your activities and your projects. Given R&D is a generous relief, we've got a lot of boutique firms that have been popping up all over the place recently, promising significant benefits to companies without actually reviewing any work that's been undertaken. They'll simply look at turnover, look at profits or losses in a period and say, right, we think we can get you back X amount. Well, they're looking at that from a costing perspective and not the actual qualifying projects that you've undertaken. So that's always the first step. So please be very wary of anyone promising free money in some instances or money back for doing an R&D tax relief claim for you. We need to make sure that they're following the correct process. So that's the main point. And that covers off the majority of the information we wanted to include in the webinar, I guess. I'm open to questions now if anybody has any they'd like to raise with me. I can stop sharing my screen and we'll try and go through some. Have there been any questions in the chat at all, Claire?
Nothing's come through for the chat. But if anyone does have any questions, we can ask now or when we do the follow-up of sending out the recording and the slides, if anyone has any questions, I can include Claudia and Dom's contact details and we can contact directly if that is easier. Yeah,
absolutely. I think following this webinar as well, I'll be available for around half an hour or so if anyone does have any questions or they'd just like to call the office. I might get a couple through now, so I might be on the phone to someone, but I'll do my best to cover things off.
No problem. Does anyone have any questions?
Yeah, go on then. I've got a question. It's Ian Francis from Aberclean here.
Hey,
we design powder coating plants for different customers, and each plant is unique from the point of view it has to be able to coat the client's particular products and fit in the client's particular factory. But on the other hand, the basic processes are virtually the same on each plant. Mm-hmm. So the problem we have is trying to get a feel for where design stops and development starts. So every plant we have to design on a project by project basis, a bit like a construction company building blocks of flats. Each block of flats isn't the same as the last one because it's got to be, a different number of floors, a different size of rooms and fit on a different site, but it's still a block of flats at the end of the day.
Yeah.
And I think our difficulty is trying to get a feel for, is the design work that we do classed as development in any way, or is it just design work that therefore doesn't qualify?
I'm with you. I think when we're assessing those projects, and I imagine there's quite a number of them, we need to look at whether in each specific example, is there technical uncertainty arising? I.e., at what point during that development of the new product for a customer do we say, actually, we're not sure whether we can produce this type of product? If in every instance it's actually, well, we definitely can do. We might have to do a little bit of work here and there to sort of overcome a couple of obstacles. then we're probably not in the realms of qualifying for R&D purposes. But actually, if we're looking at it and saying, well, no, we do need to do quite a bit of testing and analysis on these specific areas, which are different in each case, that's what we'd need to focus in on and say, right, what are we trying to achieve with this specific piece of development?
Yeah.
How are we going to do it? Are there any projects that we've had that have actually failed and we've had to go back to the drawing board? And where there are instances of that, that's where we try to focus in on as much as possible and look at those projects in isolation, I guess.
Right. Okay. Okay, that's helpful. Thanks. Thanks, Dominic.
Yeah, no problem.
Does anyone else have any questions? If not, not to worry, we will send out the follow-up. I'll include Dominic and Claudia's contact details so you can contact people direct. And if you do have any questions, then don't hesitate to get in touch. I think that's everything then we've covered. So we'll leave it there then. So thank you everyone for your time.
Yeah, absolutely. Thanks everyone for listening to us and joining the webinar.
Yeah,
thanks everyone.
Yeah, thank you very much.
Thank you.